Hello, welcome to my slideshow on Bank of America. Today I will be discussing the history of Bank of America, the competition, the statistical values, and whether or not to ultimately buy stock in Bank of America. To begin with, we're going to start off with the history of Bank of America. The bank history dates back to 1904 when Amadeo Peter Gianni opened the Bank of Italy in San Francisco. It issued the first bank credit card, Bank AmeriCard, in 1958. Something so small ended up turning into something so big, being that so many Americans to this day, and actually people across the world, use credit cards. As we learned in finance class and special topics in finance, having good credit is very, very important. Credit gives you basically leeway to do a lot of things. For example, if I wanted to go out to buy a house and I didn't have the exact money for it, if my credit is decent, I could actually apply for a loan to get the house. Next, we're going to start with the first competitor of Bank of America. That would be Goldman Sachs. Goldman Sachs is a multi-international financial services firm. They provide investment banking, management services, and securities. Subsequently, we have JP Morgan Chase. JP Morgan Chase is a global financial service provider that offers asset management, treasury, and investment banking. And last but not least, Morgan Stanley. Morgan Stanley is an American multinational investment bank and financial services company. Those are just an overview of some of the competitors, but we'll begin to statistics behind each company a little bit later. To begin with, we have the annual report for Bank of America. The annual report reads as follows. Dear shareholders, I am pleased to report to you that by adhering to responsible growth, the 200,000 strong team at Bank of America produced record earnings in 2018 of $28.1 billion or $2.61 per share. We did this by living our purpose, which is to help make our clients' financial lives better through the power of every connection we can make, both for them and with them. Even as we continue to provide capital to our customers and clients, invest heavily in our company, and deploy capital to address some of the world's toughest priorities, we were able to return nearly $26 billion in capital to our shareholders, including more than $5 billion in dividends and more than $20 billion in share repurchases. We continue to make progress to undo the dilution from the shares we issued through the economic crisis of 2008 to 2009 and subsequent regulatory changes. Our capital, liquidity, and capacity to serve clients are at record levels, and we have reduced the total number of fully diluted shares outstanding to below 10 billion. Over a 3-year period, total shareholder return increased by more than 50%, outpacing the S&P 500 and exceeding the average of our U.S. large cap peers by more than 3 times. Basically, to sum it up, this annual report was telling people that Bank of America is doing their jobs and accomplishing their goals. By recording record earnings in the year of 2018, it shows that they were on a trend of positive earning at the end of 2019. They, like most other big companies, are still recovering from the 2008-2009 financial crisis, but they didn't let that hold them back at all. Also stated that they made $26 billion in capital last year. This means that people are still believing in Bank of America and that they're here to stay for a long time. To begin with, we're going to start with the Morningstar review, advising people to actually buy stocks in Bank of America. First off, they had quotes saying, Bank of America is poised to succeed as a provider of retail banking and wealth management services on a nationwide scale. Furthermore, they went on to say many of Bank of America's past problems were a result of poor capital allocation decisions. The company's size, it is now too big to make material acquisitions, along with increased regulatory scrutiny, reduces the risk going forward. In all, during the last recession, Bank of America had one of the worst times ever. But even after that, Bank of America has rebuilt itself and climbed to the top. With reasonable pricing and being on the uprise, this article advises people to buy Bank of America stocks now. Next, we're going to start with another Morningstar review, but actually advising people to sell Bank of America stocks. With quotes saying, Bank of America has been cutting expenses for years, and the low-hanging fruit in this realm has been picked. A financial institution of this size and complexity is inherently unimaginable. It's even possible that regulators might decide to break up the company. Last, digital competitors are nipping at the heels of traditional branch banks and banks with their extra profitability are back on offense. As competition heats up and the credit cycle turns, returns seem to have only one direction to go: down. In all, this article believes it would be bad to buy Bank of America stock, mainly because it is too huge of a company and because of the competition coming into play. In my opinion, it can be too big of a company. Subsequently, if there is more competition, then that would just add more risk to the stock. The more risk, the more reward, which people will love. Next, we're going to start with an ID analyst review on Bank of America. Some quotes included: Bank of America is probably the best position in 2019 of all the major banks. That's because it had further ground to regain compared to the others. The bank now is leaner and more competitive than ever. Subsequently, it reads: rising interest rates are providing tailwinds for Bank of America and its peers. Banks make higher profits on loan spreads when rates rise. Bank of America also is trading about 20% below its recent highs, a strong argument that the bank stock is currently a value. Lastly, what's more, with Bank of America stock down 20% from its highs, it represents a compelling bargain. Every portfolio should hold at least one financial services stock. It's hard to see how you could go wrong with Bank of America. This article is saying that Bank of America stock is a steal right now. It's only 20% below its high and it's only starting to grow. Eventually, it will surpass its high and begin to make an immediate profit for whatever stockholder decides to buy a stock. Next, we're going to get into the Finstead review. Having bottom book value that's close to the current price means there is more upside potential than downside risk. This is a bank that has been forced by the government to have a fortress balance sheet. It is also US centric, so it carries no risk to foreign entities like, say, Goldman Sachs, which is a big competitor for Bank of America. This stock is saying what ID analysts are saying as well, with Bank of America stocks being so cheap right now. They are trading a lot for this price, and now is the time to take opportunity to buy the stock. It's still early on in the year, but Bank of America is still on track to make a huge profit for those who purchased earlier on. Our last review will be coming from Nicholas Shaheen, an Investor Place contributor. Nicholas stated, having bottom book value that's close to the current price means there is more upside potential than downside risk. This is a bank that has been forced by the government to have a fortress balance sheet. So the market is pricing it at its going out of business price. This is not right, but it does help my cause if I want to go long. Basically stating Bank of America stock is selling as if they're going out of business, but they are in fact not. All of these things brings me to the idea of purchasing Bank of America stocks now. They're selling at a bottom of the line pricing and rates. All the meanwhile are still increasing. Every week their value is going up. Why not buy now? You're getting them at a discounted price as opposed to what they're actually worth in the first place. To continue, we're going to start with the Wall Street Journal review of Bank of America. The Wall Street Journal went on to state things such as quarterly profit at the Charlotte, North Carolina-based bank, the second largest in the U.S. by assets, was $7.31 billion compared with $6.92 billion a year earlier. This review from the Wall Street Journal also suggests into buying the Bank of America stocks now. Once again, all statistical areas have shown constant improvement in the company. It would be different if it was just something going up over 1 year, but this has been a trend for a few years now, and the sky seems to be the limit. Next, we're going to get into the New York Times article on Bank of America. The New York Times went on to state the narrowing yield spread between stocks and bonds make owning funds that focus on big dividend payers seem like a sound idea, but doing so carries risks, several say. This article goes on to say that buying into the stock could carry some risk. As someone who wants to get into buying stock, you have to make the choice between being someone that is conservative or being someone that doesn't mind being risky. Typically, the higher the risk, the higher reward, and this article goes on to say the same thing about Bank of America. Next, we're going to get into Barron's article on Bank of America. The article explains that Bank of America net income will continue to increase this year. The article states, coming into Tuesday, Bank of America stock was up 21% year to date, topping both the S&P 500 index, which gained 16%, and the KBW index of 24 bank stocks, which had risen 15%. The bank shares trade for about 10 times projected 2019 earnings. This means that Bank of America is continuing to beat out expectations given to them. For the blind eye, 21% may seem minuscule, but to someone who knows what is going on, that is a huge increase, especially for a short amount of time. Now here is the research press releases for my company. The article went on to explain how Bank of America had been hiring more employees that come from low income places. Seeing news like this is good because it goes to show Bank of America is giving people equal opportunities to work for them. It is especially good because it gives those people who come from that low income place hope that they can make it out and hope to inspire others to be able to work for an S&P 500 company, which could be a dream job for most people. Here are the stock prices for Bank of America and their competitors. In 2015, Bank of America stock was $25.38. Goldman Sachs was $180.23. JP Morgan Chase was $66.03. Morgan Stanley ended up being $31.81. Towards the end in 2019, Bank of America was $30.47. Goldman Sachs was $201.63. JP Morgan Chase was $112.51. And Morgan Stanley is $46.34. If you look at the graphs, you can see a steadily increase of Bank of America with a small drop, then a bigger increase from 2018 to 2019. Out of all of these companies, each of them had ups and downs. That's fine for stocks. If you look into any stock that's in the stock market, it's very rare to find a company that just goes up, up, and up, and up without actually having some sort of drop. So a small drop in Bank of America isn't too much of a risk or too much of something to be scared of. Next, I'm going to start off with insider trading for Bank of America. In the last 12 months for Bank of America, there have been 50 insider trades, of which only 8 have been purchases. The rest were all sales. Seeing this from an outsider point of view would suggest that something's going on with the company or the current climate of the stock market. With a lot of stocks doing very well, it's odd to see a lot of people backing out of stocks in the company. Now, we're going to get into top management of the company. Brian Moynihan. Brian is the chairman of the board and also the CEO of Bank of America. He's in a few organizations that focus on economic and market trends, which includes the World Economic Forum International Business Council, the Financial Services Forum, and the American Heart Association. He is also a member of the Federal Advisory Council of the Federal Reserve Board. Last year, he received $25 million in stock grants and a $1.5 million salary. To continue, we have Paul M. Donofrio. Paul is the CFO of Bank of America, otherwise known as the Chief Financial Officer. This means that Paul is responsible for managing the financial actions of the company. His main priority is, as Professor Betz would love to say, is to increase cash flow, cash flow, cash flow. He also analyzes the company's strengths and weaknesses and tries to add on and or change them. As CFO of Bank of America, Paul made $11,929,455 in total compensation. Of this total, $1 million was received as a salary. Here we're going to discuss PE ratios, dividend yields, bond ratings, and betas for my company and competitors. First off, we're going to start off with Bank of America's PE ratio. They have a PE ratio of 11.33. Goldman Sachs has a PE ratio of 8.59. JP Morgan Chase has a PE ratio of 12.42. And Morgan Stanley has a PE ratio of 10.25. These PE ratios are kind of high, but that's not actually bad. A higher PE ratio means that they're getting higher than expected earnings. Next, we're going to start with dividend yields. Bank of America has a dividend yield of 0.6. Goldman Sachs has a dividend yield of 3.4. JP Morgan Chase has a dividend yield of 3.2. And Morgan Stanley has a dividend yield of 1.2. A dividend yield is basically explaining the higher expected payout for each stock. Next, we're going to get into the bond ratings. Bank of America has an A2 bond rating. Goldman Sachs has an A3 bond rating. JP Morgan Chase has an A2 bond rating. And Morgan Stanley has an A3 bond rating. Lastly, we're going to get into the betas. Bank of America has a 1.56 beta. Goldman Sachs has a 1.22 beta. JP Morgan Chase has a 1.17 beta. And Morgan Stanley has a 1.15 beta. Betas that are higher than 1 usually means that there's more risk. So that's actually not a bad thing depending on who the person is. I'm always somebody that's going to take risks. So the higher the beta for me, the higher the risk, which means the higher end of return that I can actually get. Here, these are the ROE and capital structures for my company. After that, we're going to get into the EPS, DPS, and BVPS over the last 5 and 10 years for the companies. The EPS growth over 5 years for Bank of America has been 1.71. For Goldman Sachs has been 9.8. For JP Morgan Chase has been 4.6. and for Morgan Stanley has been 3.3. If you look at the data provided in each category for basically every bank, everything has went up. There's a positive increase in each company, except for the DPS growth over 10 years for Bank of America, in which is decreased by 0.17. Has Bank of America ever merged with anybody else? Actually, we have. Bank of America in 2007 acquired the U.S. Trust Corporation, an investment firm that manages investments for high net worth individuals. High net worth individuals could be someone as an athlete, or it could be someone like an actor, Denzel Washington, a LeBron James, some rappers, singers, a Rihanna, anybody with a high net worth like that. Next, the firm enlarged its credit card business by acquiring National Processing, a transaction processing firm, in 2004. This is major for the company because every big bank needs to have a big credit card network. The more credit cards that the business can manage, the more money that people can bring in. Everybody in America needs a credit card, especially in today's time. Then in 2006, Bank of America made a merger with MBNA Corporation, which is a leading issuer of credit cards. Next, we're going to get into current events that have had an impact on the company. A big problem today that companies have is scamming. In today's climate, there's an ongoing issue with people, mostly in their younger ages, depositing fake checks in the banks. Majority of these fake checks are digitally altered, which makes it hard for computers to spot and even harder for bank tellers to spot. Majority of the time, it is often too late to find out because once the cash is cleared and gone, there's no way of getting it back or tracking it down. Next, we're going to get into the global and political risks facing our company. A big risk right now would be the people idea thinking there's another financial recession coming. As seen on the graph to the right, there seems to be a pattern on when recessions have happened. As of now, in 2019, we're starting to begin to be on track for another recession. But in my opinion, I don't believe the country will allow that to happen again after the effects of the last recession and the outcomes that we're still recovering from. This isn't the first time the growth in household income has decreased. It's happened before without being a recession. I firmly believe that's going to be the case here. Now I'll give my own analysis of the company's past performance and future prospects. In the past, Bank of America has performed fairly well. Since the financial crisis, Bank of America stock has increased a whopping 600%. Bank of America is something that can be a gold mine for someone who has a decent amount of money to put into the stock, and is a great starter stock as well. In the near future, Bank of America looks to continue to increase in stock value. Right now, it is a steal to grab the stock. And by the end of this year and early next year, when the world sees that we are in fact in no danger of another recession, the stock price will go up even more. Remember that Bank of America is selling at a bottom price, so that price is lower than the actual worth of the stock. Would I buy stock for myself in this firm? If I had the chance to, I would buy. I'm someone who is in their younger 20s and willing to take risks now and be able to reap the benefits later. Over the course of 5 years, the price of Bank of America stocks have kept increasing steadily. Now, with the fear of another woman recession, the price should go down once more. When that happens, it will be a great chance to buy the stock. The bond rating is an A2, which means that an obligor has strong capacity to meet its financial commitments, but is somewhat more susceptible to the adverse effects of changes in circumstances and economic conditions that obligors in higher rated categories have. So, buy. I would recommend just buy the stock. Even if you're someone that doesn't want to take a risk, just buy a few stocks. Have extra money lying around, go out and buy a few Bank of America stocks. They don't cost that much at all. If you buy it now, you'll be grateful that you did in about 5. If you wanted to wait a little bit more, in about 10 years. Thank you for listening to my slideshow, and have a good evening.